Hello everybody, how are you? Sorry the video came a bit later today, but I was waiting for some data. I was waiting for the consumer confidence that came at 101.3. It fell quite a lot, to be honest. The expected was 104.1. And if we check what it actually said, let's come here. Here, the expectation index based on consumer short-term outlook for income, business, and labor market conditions fell to 68.1 from 74. The expectation index has now remained below 80, the level associated with a recession within the next year. Okay, and here is basically telling you that consumers became more pessimistic about the outlook for both business conditions and labor markets. So it's basically telling you that the consumer is worried and that they are expecting a recession. And how can they not? If everybody's calling for a recession, you turn on the news, they're going to talk about a recession, so this is normal. Everybody's talking about a recession, okay? But there is a problem. So you're telling me that the consumer confidence has dropped, that they're expecting a recession, that they're getting quite pessimistic and worried about their jobs, the labor market, and the economy in the short term. But at the same time, there is something that is not matching here. And it's that the new home sales, it's a data that just came in too right now. It just came in very hot. 60,000 new houses have been sold during the last month, okay, compared to the previous one. So, how is that possible? Is it because they are getting used to high interest rates? The consumer spending hasn't slowed down. I'm gonna post a chart. I'll try to post a thread later today on Twitter, but you're gonna be able to see that the consumer spending has not stopped. They are getting used to high inflation, high interest rates, and that's indeed a problem because when you buy a house, unless if you're a cash buyer, you're gonna need a mortgage with high interest rates. You're gonna pay a lot of money to the bank because now it's expensive to get a loan, to get a mortgage. You're gonna have to buy furniture, you're gonna have to go shopping. So this is fueling inflation. This is gonna be a problem for the Fed. How is the Fed gonna manage this problem? Are they gonna keep rising interest rates until they can suffocate the consumers and then they have no choice? Don't know. It's definitely very tricky, and now in 9 days we have the FOMC interest rate decision and a press conference. So this is what I've told you guys. The next 10 days is going to be very difficult to trade, so make sure to apply proper risk management, stop loss, maybe take less trades, don't overtrade, because this is the type of environment where you're gonna be losing money. It's quite choppy at the moment, okay? You can see now in the last, 3 days, Bitcoin price been coming up, coming back down, up, down, and it's in a range. It's choppy. But anyway, let's go to the charts and see what Bitcoin is up to. As you can see, Bitcoin hasn't done much in the last 24 hours. It's still in this range, which is the weekend range. So they are waiting for news announcements, okay? They are waiting now because after the market closes today, we're gonna have the earnings from Microsoft and Google. But remember, it's gonna be after the S&P market is closed. But Bitcoin is not closed, so Bitcoin is gonna be able to react to it. So what we are anticipating is that after the market closes later today, there might be some volatility coming in crypto, and tomorrow in the stocks. But Bitcoin did something quite interesting yesterday though. Remember that we were saying that we were still in the weekend range. We had to the downside a liquidity pool. We're gonna go in a minute to the high block. And then to the upside in the 1 hour time frame, in the 1 hour time frame, we had a wick that needs to be filled. That one, okay? And Bitcoin, you can see that yesterday what they did is that they went and hunt all those liquidations all the way to the 26,900 zone and then bounced. And if we go to the daily time frame, we can see that yesterday the candle closed above the daily 50 EMA, and right now currently we are still above it. So I can't be very bearish here because we are above support. Are you gonna short above support? I'm not. But it's also not an area where you can long very confident, because if we go to the 1 hour time frame, we can see that the 50 EMA is acting as a resistance and we can't get above it. And when we went above it, in this zone here, we were not able to test the 50 EMA support because these wicks they're not testing the 50 EMA. You can see they didn't touch it. And then when we went to touch it, we just fell again. So I can't long here because we are below low time frame resistance, and I can short because we are above high time frame support. So what I'm waiting here is to see Bitcoin bouncing and then retracing the 50 EMA, and then this is the moment where I can long. Okay, they test this as support and then I can long, and I'll target it this area, the wicks. Or in the other scenario, if you go to the daily time frame, I would have to see something similar, but in the opposite way. I would have to see a candle closing below the 50 EMA, then I want to see a retest and a dump. But only if that happens and we lose the daily 50 EMA, I can't favor shorts. Okay, so what I'm gonna be doing is basically what I said. I'm gonna be waiting in the 1 hour time frame and see if Bitcoin can get above the daily 1 hour 50 EMA, retest it as support, and then that's when I'll go long to the 50% of the week. Let's check the liquidation heatmap in the 1 month time frame. Let's see how these liquidations are. Oh, you can see they are gone. They are liquidated. It's a sad story, but it's a sad game. And you can see how these two yellow bars at 27,000 and 26,900, they've disappeared now. And that's because some traders got liquidated, guys. That's what you must pay attention to, where the liquidity is, okay? Because you don't want to be that liquidity. And you can see that the market intentionally spiked down to liquidate those traders, okay, those positions. Now let's go to the 7 days time frame. I suppose that it's gonna be quite a messy chart at the moment because we're in a range. It's quite choppy. Let's see if it loads. Here we are. I mean, yes, you can see that we are right between two big liquidity zones. 28,350 to the upside and 26,350 to the downside. And this is basically because when price is spiking up in a range, the retail trader is programmed to think that when price is going up, it's going to go higher. So here they're going to open more longs. And in this zone, when price spikes down, they're going to think the opposite. They're going to think that price is going to break this zone and go lower. So the liquidations are going to increase in both areas. This only shows that the market is being very choppy at the moment. It's very difficult to get right now a good trade for some hours. So I would say wait for confirmation. Keep an eye on that 50 EMA in the 1 hour time frame if you want to open longs. Okay. If you want to open shorts, keep an eye on the 50 EMA in the daily time frame and play your trades accordingly. Now you might be wondering, what's the target if we break below the daily 50 EMA? Well, let's go to the daily time frame. I'm going to tell you my opinion. And if we break below this purple line and the candle closes below it and test it back as a resistance, then price is going to go lower all the way here to 25,200. Why? Because it's a zone where there has been two sell-offs. Okay, so it was a big resistance at the time. You can see here, price goes up, there is a sell-off, price goes up, there is a sell-off. And this zone hasn't been tested at support yet, so eventually, if price goes lower and breaks below this zone, then the next target is going to be 25,200. What I don't like here is that most traders I'm seeing are calling for this target here above support. Let's see what happens, okay? Because you know the theory of the contrary opinion. When people are bullish, prices usually goes lower. And when people are bearish, like now, price usually bounces, okay? So be patient. Let's see what the market gives us, and then we're going to play with that. Let's check really quickly how the dollar index and the S&P is doing, because we had some projections going on there. Oh, I see, it's bouncing now. Okay, that's interesting, because you can see that in this zone, there is quite an important resistance, and there were a lot of spikes to this zone. You can see it's all wicks. So basically, I think that they were building their shorts. Price goes low, and now it's bouncing again. And what do you think is going to happen now? Well, I'm going to tell you what I believe. I think the retail trader is going to think that this zone is a resistance, so price is going to do exactly the same. It's going to come here, get rejected, and go down. But what I believe is that price is probably most likely going to go higher because there is a lot of liquidity here. Imagine all the stop losses that are placed in this zone. So I think the dollar index, the most probable scenario is that it keeps going high and breaks above this zone. Now, if you go to the S&P, sorry, SXP, here. Okay, if we go to this, oh, it's going to the box, finally. So you can see very clearly again, we were saying this, that 4,100, it was going to be our next target. Price was playing around this box with these wicks, you can see. Okay, but eventually, again, people think this is going to be a support. So price goes lower, hit all those liquidations and stop losses, and I think we're going to be in this box for some time. But I remember that I said this in one of the most recent videos. I don't want to delete that box. Let me remove this manually. Okay. If price, but I think price here, it's basically consolidating and is doing a sideways move after a leg up. Okay, so this is to me sideways. Now, if we break below the 4,100, if we break below this box, then we're gonna have a big problem because I think that most likely is the price comes again to the 4,000 zone. Okay, so that would be around here. So that would be a massive drop because there is, look, for example, here I already can see that there is a zone that should be filled at some point. That's the 4020. So what I mean with this is that this zone needs to hold. Otherwise, price is going to go lower and Bitcoin should, in theory, follow. So keep an eye on these charts, guys. This is pretty much everything I wanted to say today. I hope that you liked the video, and I see you soon.